In class 11th accountancy, we are on chapter number 9, that is financial accounting, final statements, financial statements. These accounts are prepared at the end of the accounting year. That's why it is known as financial statements. So we are on the completion of this chapter, but today I am to explain you the numerical with the balance sheet. Okay, so today I am going to explain you numericals with the balance sheet. See, yesterday also we were doing the same topic, but today I am going, we will do the numericals. Okay, so see, marshalling and grouping of asset and liabilities. A major concern of accounting is about preparing and presenting the financial statements. The information so provided should be decision useful for the users. Why we prepare financial statements? To give the information to the users. Various users are there, those who use financial statements, and they will do the analysis. Now what are the informations they will get? And who are the users? See, my dear children, they will come to know about profitability and financial position of the organization through the financial statements. And various users are here, as in the beginning of this topic, I told you that the owners, proprietors, management, government, employees, investors, banks, suppliers and society. Various users are there. They will use this information, and it is necessary that the items appearing in the financial statements should be in proper format. If these items in the balance sheet, these should be properly grouped and presented in a particular order. See, if we will not make the financial statements according to the prescribed format, the users will not get the information accurately, and it is very difficult for them to analyze them. So, marshalling of asset and liabilities. First, in a balance sheet, the assets and liabilities are arranged either in the order of liquidity or permanence. An arrangement of assets and liabilities in a particular order is known as marshalling. See, proper order should be there. So there are two ways, permanence and liquidity. When we show the asset and liabilities in a systematic, arranged way, then it is known as marshalling. Okay. Now, liabilities and assets are arranged in two forms, two ways, either liquidity or permanence. So when we arrange assets, that is marshalling. But if we arrange the asset in permanence order, then see, note down please, the most permanent asset or liability is put on the top in the balance sheet. And thereafter the assets are arranged in their reducing level of performance. What do you understand by permanent asset? Those assets which we will keep for long time period, not for resale purpose, and used for many years, like land and building, plant and machinery, furniture and fixtures. These all assets will come under permanence way. Okay, so see, this is the balance sheet I am going to show you. Then see, furniture is the most permanent asset in this balance sheet generally. Land and building, plant and machinery, vehicle, furniture, this will be the sequence. Now, liquidity way. First of all, we will note down all those assets which are not in permanent form, which are liquidity order. Liquidity order means first we will note down all those assets which are easily convertible into cash, like cash, bank, cash and cash equivalent, bank balance, debtors, okay, short-term securities, marketable securities, and for the way we have to use liabilities also. Now, in case of liquidity, the order will be reversed. The information presented in the manner would enable the user to give a good idea about the life of the various accounts. The assets account of the relatively permanent nature would continue in the business for a longer time, whereas the less permanent or more liquid accounts will change their forms in the near future and they will become cash or cash equivalent. So see here in this question. Then the next topic is grouping of asset and liabilities. Grouping of asset and liabilities that you can be able to understand in class 12. Because there the asset classified in NCA and CA, non-current asset and current asset, as well as liability side also classified. Liabilities also NCL, CL, that way. So grouping of asset and liabilities means the items appearing in the balance sheet can also be properly grouped. The term grouping means putting together items of similar nature under a common heading. Similar nature means current asset will be under the head of current asset. What are the current assets now? Please. Yesterday I gave you the detail. Yes. Cash, bank, short-term marketable securities, current investment, debtors and stock. Closing stock on inventory. That will come because these are all are of similar nature, so they come under common head. Same way for current asset, same way for non-current asset. See, non-current assets are those assets which are for long time period, which are not the current asset. This is of two types, tangible and intangible. Tangible means non-current asset, tangible means which we can see or touch. Yes. Land and building, plant and machinery, furniture and fixtures, vehicles are tangible. Then what about intangible? You can see the yesterday's video I have explained. Intangible assets are those assets which we can not touch or see, like goodwill, patent, copyright. Yes. Okay, so these are the way of grouping the assets. Same way for grouping the liabilities also. Current liabilities, non-current liabilities. Current liabilities means those liabilities which we have to pay within 1 year. And non-current liabilities are known as long-term liabilities, long-term loans, etc. Okay, now see, we will do this question. Complete question of trading, P&L and balance sheet. See, when we will start the question, I am giving you the easy way. This is the complete question and I am going to give you the easy way how to do it. See, this is given in the NCRT, okay, and the page number of NCRT is this. Okay, now see, one by one. Carriage on goods purchased. Because this carriage is on goods purchased, that's why it will be shown in the debit side of trading account. One by one, this is. Okay. The next, carriage on goods sold. This expenses is related with the goods sold, that's why it will be shown on the debit side of P&L account. Clear? Now see, manufacturing expenses. Clearly given manufacturing expenses to be shown on debit side of trading account. Then advertisement is related with sales, that's why P&L. Excise duty related with production, factory lighting related with production, trading account. Okay? One by one you can note down. Debtors are the assets, the persons who will give the money to the organization. That's why asset in the balance sheet. What you should do, P you should write for trading, P you should write for P&L, and asset A for asset, L for liability. This way then it will become easy for you. Creditors. Yes. Creditors are the liabilities and it is to be shown on the balance sheet. Dock and clearing charges, trading, postage and telegram, fire insurance premium, P&L means P. Both are in debit side because P&L, in the P&L account we show all the expenses and losses in the debit side. Then patent. Just now I told you. Patent means intangible asset and that is the asset that's why shown in the asset side. Very good, balance sheet. Income tax. Income tax is a personal expenses. It is treated as drawings. Again I am telling you. See, income tax is paid by the proprietor on his income. That's why it is termed as personal expenses and it should be shown as drawings and it should be deducted from the capital. Okay. Now office expenses. Where to show the office expenses? P&L. Good answer. Good. Now cash in hand. Cash in hand is an asset shown in the balance sheet. Bank overdraft is the liability. Bank overdraft, as I taught you in chapter 5, bank reconciliation statement. This is the facility given by the bank to the current account holders so that they can withdraw more than their deposits. Okay, so bank overdraft will be treated as current liability. Now motor car, asset, drawings minus from capital, audit fees, P&L. Because this is the loss or expense for the business and all expenses of the business to be shown in the debit side of P&L. Good. Plant is the asset. Repair to plant is not an asset. It is an expense and it is to be shown in P&L. Good. Now stock at the end, this is closing stock. Purchase less returns, it is net purchase, debit side of trading account. Then commission on purchase, it is also on the debit side of trading account. Now the next, incidental trade expenses. See, it is written trade, but it is not to be shown in trading account. It is to be shown in P&L account. So incidental trade expenses to be shown in profit and loss. Investment is an asset. Interest on investment. See, if you invest somewhere, you will get the interest as return, earnings. So these are to be transferred in the credit side of P&L. Capital, liabilities side. Sales less return. Sales less return means net sales and it is to be shown in the trading account credit side. Sales tax paid is expense for the business. Discount allowed P&L debit and discount received P&L credit. Now see one by one I am going to show you the question. See, you can put to or by if you want. But in NCERT that is not given, but in some refreshers and other books that is given, that to and by you can write. Now one by one. See, this is trading and profit and loss account. This is given in the NCERT page number 348. Now see, buy sales less returns. 5,20,000 is the net sales, so we have to enter here. But we are not writing closing stock in trading account. There is a reason behind that. Because trading account is given in the trial balance itself, not separately. That's why it is to be shown only in the asset side. Okay. If that closing stock is given at the end of the trial balance, then we can take here. Okay. Now see debit side. Purchase less return, net purchase. Opening stock not given, so we are not writing here. Commission on purchase, carriage on goods purchase, manufacturing expenses, factory lighting, dock and clearing charges, gross profit. See now how to calculate this gross profit. Simple. Total of credit side minus all the items of debit side. So the remaining amount will be termed as gross profit. And this gross profit should be transferred from this side to this side. Okay. So by the double lines, we can say the trading account is over. Trading account completed. Buy sales less return, to purchase less return, commission on purchase, note down please, carriage on goods purchase, manufacturing expenses, factory lighting, dock and clearing charges, and how to calculate gross profit. In the rough column you can subtract all the items from 5,20,000. This remaining amount will be transferred here. Then after double lines of trading account, profit and loss account start. Interest on investment is the income, discount and purchase is the income, is the source of. Now come to the debit side. Excise duty is in P&L account. Carriage on sales because it is related with sales, as I told you. Advertisement, already we marked, where we marked profit and loss, we should transfer to this side. And I told you incidental trade expenses or trading expenses, sales tax paid, discount allowed. Now how to calculate net profit? Okay, I will show you. This is the problem many students are asking. So, how to calculate gross profit? Look here. Gross profit is equals to total of credit minus total of debit. Total of credit side is 5,20,000. And total of debit side. Okay, so that will be 298,400. So the total of this side is 2,21,600. So the remaining amount will be treated as gross profit. Now we will use the same way for calculation of net profit. Same total of credit minus total of debit. When we subtract the debit total from the credit total, if the amount remaining this side, if the amount is remaining this side, that will be termed as net profit. Okay? If the amount will remain this side, credit side, then it will be termed as net loss. Why? How you can say this is net loss? I explained you already, because the total of expenditures are more than total of income. So if the total of income is more, then we can find out that the amount remaining in the debit side, it means it is net profit and it is to be transferred to capital account. Be careful, it is to be transferred to capital account. Why capital account? I already explained you, because by the net profit, the capital of the proprietor will increase. Even in accounting equation, I told you, even in the common sense, we can come to know that the capital of the businessman is increasing by the profits. If he or she is earning profits, then the capital will increase. Otherwise, net loss will be the reason for decrease in the capital. Now the net profit is 2,55,400. Now see the balance sheet, very easy way. Yes, see. First of all, we should complete liabilities side. Balance sheet as on or as at 31st March. No need to put debit and credit particular or amount. Simple way, this side is liability, as I told you, left side is for liabilities, asset, okay, right side is for asset. Now left side is for liabilities, and we already marked that bank overdraft is the liability, because the proprietor had taken withdrawal more than their deposits. That's a type of short-term loan. Creditors, liabilities. Now see the capital, how we are writing in inner column, then transfer it to outer column. Good. Capital 1 lakh, add net profits 2,55,400, less drawings 8,000, less income tax 24,000, all given in the question. So net amount will be in outer column, that is 3,23,400. The total will be 4,14,400. Now come to the asset side. Cash in hand, debtors, closing stock, investment, motor car, plant, patent. See, closing stock we are writing here only in asset. Why? Because closing stock given in the trial balance, if that is given outside the trial balance, then we should enter it in two sides. One, credit of trading, another asset. But here, this is given only on one side, that's why it is to be shown on the asset side. Closing stock is the asset and patent is an intangible asset. Now the total will be same of both the sides. If the total of balance sheet is not matched, then you should find out the difference and search in the trial balance. Maybe some item is left there and not included here, and you can find out by the amount. So first of all, if the balance sheet of both the sides is not matching, then find out the difference and search in the trial balance. Maybe that item You have not entered. Okay. So now see, I am going to tell you how to make the with the help of trial balance. This is the question given on in the NCRT. Now see page number 348 in the NCRT. You can see purchase less returns, net purchase, opening stock not given, commission and expenses on purchase in debit side, manufacturing, factory, production expenses in the debit side, sales less return, net sales to be shown here, closing stock not showing because that is given in the trial balance. Then how to calculate gross profit, I told you, credit total minus all items of debit. Then this gross profit you will transfer this side, add all the income receipt and deduct all the expenditures. Then you can come to know the net profit, and net profit to be transferred to capital account. If that is lost, then also it is to be transferred to capital account. But here in the balance sheet, what will you do? You will subtract that amount. But here this is net profit, that's why we are adding. If that is net loss, you can subtract it. Then less drawings because withdrawn. Income tax also drawings, term less drawings, so this will be the total. And this is asset side, all the assets you have to show here. Okay, so this is the question, complete question we have completed, and tomorrow I'll explain you about the project work in accountancy, and if you have any doubt you can ask.